Hi, everybody. Thanks for joining me. Before we get started, please hit subscribe to my channel to keep up with all of my latest investing and personal finance content. And also, please be sure to check the link on your screen for a special offer from our sponsor, The Motley Fool, where you can get the top 10 stocks to buy right now. All right, one of my smaller positions, but one that I think has a lot of potential for the future is SoFi, ticker symbol SOFI. SoFi is the banking disruptor. They are aiming to do things like checking accounts, savings accounts, investing, lending better than the big banks do. And so far, the results have been pretty impressive. The stock is down 80% from its highs because it is a growth stock and it's just a victim of the environment right now. But the numbers look very strong. Its third quarter earnings report was pretty much a home run. Their member base is up 61% year over year. They now have 4.74 million members. Those members have 7.2 million financial products. So, like a loan would be a financial product. That's up 69% year over year, including impressive 83% growth in financial services products. So, financial services products are things like their checking accounts, which is called SoFi Money, SoFi Invest, which is their brokerage business. These are important because they kind of create a marketing funnel for the lending products. So the more financial services products SoFi has, the better its loan efficiency or its efficiency is throughout its business. So you can see on your screen, SoFi's ratio of financial services products to lending products has grown tremendously over the past few years and continues to do so. And that's definitely something that we like to see. Its revenue was up 51% year over year. It's doing fantastically well when it comes to increasing profitability. It's not bottom line profitable yet, but it's definitely moving in that direction. It's now profitable on an adjusted basis. It raised its full year guidance for both revenue and its profit margin. So that's definitely impressive, especially given the current environment. Any business that's growing at this rate in the current environment is very impressive. There are some concerns I have. It's not just that the stock's beaten down for no reason. There are some concerns. The financial services side of its business is losing money. The financial service products lost a total of $191 million over the past 12 months. There are high acquisition costs when it comes to bringing on, when growing this customer base as fast as they have. For example, they're offering something like a $50 bonus if you sign up for an investment account and fund it with just $10. But that brings a new customer into its system. The lending business has a contribution profit of about $560 million over the past 12 months. So SoFi is willing to take a bit of a hit on the financial services side if it means that its lending business is going to grow, because that's where it's going to make its money. That's where most banks make their money. So I'd like to see them kind of stabilize the acquisition cost in the financial services business a little bit. I'd like to see them build their deposit base. That's a major concern of mine right now, especially in the current interest rate environment. So SoFi has about $5 billion of consumer deposits, and they have a little over $11 billion of loans on its books. Now, for most banks, deposits provide a nice low cost source of funding to lend money. For example, if you're paying 1% on deposits and loaning money out at 6%, that's a pretty healthy profit margin. When you're taking on debt to loan out money and paying 5-6% on that debt, or even more in a rising rate environment, and then loaning out that money at 7 or 8%, it's not quite as impressive of a spread. So I'd like to see them kind of beef up that deposit base, because the fact that they're funding more than half of their loan portfolio with debt is one of the reasons that the market's so pessimistic about the stock. SoFi has about a $4 billion market cap, which compared to some of the bigger banks is just nothing. They have a lot of long-term potential if they can successfully be the new bank. A lot of companies have had success becoming the second bank. High yield savings platforms. People still use Wells Fargo or Bank of America, but will put some of their deposits with an online bank just to get a little more interest. SoFi wants to be their bank replacement. If it can successfully do that, the current valuation could be very, very a great entry point. It trades for about 0.9 times its book value, which is a lower multiple than Bank of America or JP Morgan Chase trades for. So that's a very, very low valuation despite the growth. Um, I think SoFi has the potential to be a 10 bagger or much more over the next decade or so, but there is a lot that needs to go right for that to happen. Once again, thank you so much for joining me. Be sure to click subscribe if you don't subscribe to my channel already. And as always, this video is sponsored by the Motley Fool. Be sure to visit www.fool.com/Frankel to receive the top 10 best stocks to buy now.